Greetings and welcome to the CCOF Foundation webinar on accessing crop profitability for farm business planning. Thank you for joining us this afternoon. This introductory webinar will highlight the basics of crop profitability and enterprise budgeting for farm business planning. The webinar is part of the CCOF Foundation's Farmers Marketing Tools for Success series that provides tips and tools for farmers to strengthen their sales and income at farmers markets. Funding for this project was made possible by the USDA Agricultural Marketing Service. Please note the contents of the webinar do not necessarily represent the official views of the USDA. If you're having difficulties connecting to the webinar, can't hear, can't see, please call our office for support at 831-423-2263. Press 0 for the operator and someone will help you connect to the webinar. My name is Megan Donovan. I will be your host today. I'm a program specialist at the CCOF Foundation. The CCOF Foundation advances organic agriculture for a healthy world through education and hardship grants, technical assistance, and consumer education. We are very pleased to have David Mancera of Kitchen Table Advisors and Javier Zamora of JSM Organics with us today. I'll introduce each one in more depth prior to their presentation. Before we get started with the main presentation, I wanted to let you know how you can participate in today's web event. We're looking at an example of the GoToWebinar attendee interface, which is made up of two parts. The viewer window on the left, which allows you to see everything the presenter will share on the screen, and the control panel on the right. Within the control panel is how you can participate in today's event, so let's look at that. By clicking on the orange arrow, you can open and close the control panel. From the view menu, you can also set the control panel not to auto-hide when inactive if you prefer to keep it always open. The audio pane provides audio information. By default, you have joined the webinar via mic and speakers. If you prefer, you can join the audio via telephone by selecting phone call, and the dial-in information will be displayed. During the presentation, you can send questions to our webinar staff through the questions pane. Simply type your question and click send. Throughout the webinar, we will stop from time to time for questions and answers. As a final reminder, today's webinar is being recorded and everyone will receive an email with a link to view a recording of today's event along with a PDF of the PowerPoint slides. Today, we also have a copy of the PDF of the PowerPoint slides available for download through GoToWebinar. Click on the blue file name of the handout in the Handouts pane. A PDF of the slides will open in your internet browser. You can view them on your browser or download them onto your computer. To expand or collapse the Handouts panes, click the triangle next to the name of the pane. For example, if you can't see the box with the questions pane, click on the triangle and it will expand to show the box. So we wanted to encourage you to use the questions pane, write in, let us know where you're calling in from today and what you produce. And we'll loop around to that information a little later in the presentation. We have a lot of people in the audience today, which is great. And just to let you know that we're going to try to get to as many questions and comments as possible, but we apologize in advance if we can't get to your specific question. So thanks again for attending today. And with that, I'd like to introduce our first speaker. David Mancera serves as the Kitchen Table Advisors Director for the Salinas, Watsonville, and Hollister areas in California. David grew up in a farm-working family in the small town of Chular, which is in the heart of California's Salinas Valley. His interest in agriculture and food led him to pursue a bachelor's degree in agriculture business at Cal Poly San Luis Obispo, and later a master's degree in agriculture and resource economics at the University of California, Davis. Throughout his career, David has worked in a wide range of roles, from marketing and sales to operations in corporate finance, for a diverse array of agricultural businesses, including Disc Rolls, Food Source Inc., and the California Strawberry Commission. Currently, he works with small farmers to strengthen their businesses through his position at Kitchen Table Advisors. So David, thank you so much for taking some time this afternoon to be with us. And with that, I will hand the presentation over to you.
Thank you, Megan. Good afternoon to everybody. Again, my name's David. I'm Director for Kitchen Table Advisors, and I cover the regions of Monterey County, Santa Cruz County, and San Benito County. Today's presentation is based on the work that I've been doing with Kitchen Table Advisors for the last 4.5 years, which has basically been based on helping sustainable farmers become sustainable business. From the list that Megan shared with me, it looks like we have participants from California, for sure, and 7 other states. So welcome to everybody. Before I get started here with the overview, I just want to help frame this presentation. All of what I'm going to be talking about today is from the experience I've been having with the small to medium-sized farmers that I've been working with through Kitchen Table Advisors. Prior to this experience, as Megan shared in my introduction, I've worked with big corporate ag, but I'm going to be drawing primarily from the examples and farms that I've been working with for the last 4.5 years. And just to give some context to this, I've been working with over 30 different farms here in the Salinas region, and acreage ranges from about 3 acres on the lower end to as big as about 110 acres, and everything in between. It's been a combination of fruit and vegetable farmers, but also ranchers, cattle, pigs, poultry, sheep, and alike. So I will be drawing from a number of those farmers to just illustrate the different concepts that we're going to be covering. For the overview, we're going to be briefly looking just at farm viability as a whole, farm business viability as a whole. We're going to be talking about profitability versus cash flow, and I want to call that one out in particular because oftentimes farmers get confused with those two concepts. We're also going to be looking at evaluating the crop profitability of your farm, and thinking about or asking ourselves, when is the best time to evaluate the profitability of a crop, which is really, really important, and it's something that should be top of mind. We're also going to be covering areas that influence crop profitability. There are certain levers, if you will, that drive your profitability. I have 2 examples that I'm going to be sharing with you that I am drawing from with more detailed information. And then we're going to cover briefly diversity versus specialization on a farm, and what are those benefits, the challenges, and opportunities. And then I'm going to wrap it up, summarize what we've covered, and be done with the presentation. I do want to apologize for my raspy throat. I'm fighting a cold, so please bear with me. I want to start off this presentation by just giving you a book definition of what farm business viability is. And so farm viability is looking at the whole business. And so we're talking about a productive farm on any given piece of land. It's maintaining an economic viable farm, right? And that includes everything on the farm, including the farmer and the people who work on the farm. And making sure that we keep that land in agriculture over a long period of time. And for anybody and everybody who wants to have a viable farm, we definitely have to make sure that we steward the land so that that land continues to produce. And this definition, you'll see on the footnote that we've gotten it from the Environmental Services Association. And I wanted to start off with that. I do want to point out that farm viability, when I think of farm viability and we talk about farm viability, we want to make sure that we're talking about long-term economic viability for this farm business. And every farm has to start with the crop plan. Oftentimes, farmers, and this has been my experience, just identify the crops they want to farm and then just start planting. But it's essential to start with the crop plan. It's the centerpiece for any farm business, because the crop plan is going to give us direction. It's going to help us plan the resources that are needed on the farm. And then that crop plan is also going to be the basis for any financial information the farmer needs to either make decisions or access capital. Farming is a very capital intensive business, and so we need to make sure we have that information. Over the last 4.5 years that I've had working with the small farmers that I've been working with, I've identified 3 main ingredients to manage their business. Access to capital, which encompasses operating loans and equipment loans and land. And then access to markets. We want to make sure we identify the markets that are going to return a high enough price to incentivize the farmer to continue farming. And the third ingredient is business and financial management, making sure we take care of the operations as well as making sure that the numbers add up. Farmers oftentimes forget the third one, and it's a very important ingredient in the business to help make business decisions. I'm not going to take a whole lot of time talking about the difference between profitability and cash flow, but I do want to spend some time just pointing out the importance of these concepts. It's important to clarify that profitability doesn't translate into cash on hand. Profitability is the difference between your revenue and your expenses. And we'll get into more detail around revenue and expenses. Whereas cash flow is basically the difference between the money you're receiving and the money you're paying out as a farmer. And it's super important to note that you don't need money to, it's super important to know that you do need money to continue operating. I often tell my farmers that money to business is like oxygen to humans. It's super important to keep it running. Okay, so we're gonna talk about just the bigger picture and evaluating your crop plan. One of the questions that I often find myself asking my farmers is, when does it make sense to evaluate your crop profitability? Is it during the preseason? Is it before you plant the crop? Is it during the season? Meaning, is it prior to your harvest? So you have your crop planted and you're about to harvest, say in a week. Do you figure out whether it makes sense to harvest? Or is it after you're done with your crop? Most of the farmers that I work with don't ever want to figure out their crop profitability. Farmers never have time, right? Who has time to think about this when there's so much work on the farm? Well, what I tell my farmers is that we're always thinking about crop profitability. We think about it during the preseason. We think about it during the season, and we think about it after the season. Farmers should always be evaluating crop profitability, especially before harvest. I emphasize especially before harvest because once a farmer has decided to plant the crop, they've already incurred cost, and that cost we call fixed cost. And then once the farmer decides to harvest, they're going to incur variable costs. It's costs that the farmer can still control. And so I often ask my farmers, will you at least break even if you harvest this crop? In other words, will the total revenue you generate from that crop equal the total expenses that you've incurred from growing and harvesting that crop? Oftentimes that question can't get answered. And so it's super important to always be thinking about it. Now, when we think about preseason and assessing crop profitability during preseason, you're assessing it before you spend money. And it's a super, super important time to be looking at your potential crop profitability, because you still have money in your pocket. There are a number of things you should be evaluating when you're looking at crop profitability. But the most important one to highlight is that money's still in your pocket. And as a farmer, you all well know that money on hand is super important to continue operation. And so when you're evaluating your crop profitability, you want to make sure that you're thinking about your biggest resource constraints, which are your labor, and your cash flow. Cash flow is super important in this situation because you have to ask yourself, is this crop capital intensive? When you're going through this list of evaluation, like revenue contribution, soil type, climate, pest pressure, land, water, and markets, you have to be asking yourself, how do these different variables impact my ability to make money? And for this region, I want to highlight an example. I bring out Brussels sprouts in this region. Brussels sprouts are a big cash crop, but they're also challenging to produce because there are aphid pressures. And so if you're going to grow them, you have to understand that there's going to be more time and capital to manage this pressure. Aphids for Brussels sprouts are particularly strong in the organic production system. And so as a farmer, you need to make sure that you understand what you're getting into. When you're evaluating preseason, you are playing with what if scenarios. So it's easier to think through and to adjust before you get into it. And so for a farmer, it's super important to think about the profitability of any crop during the preseason before you start planting with these constraints in mind. Now, once you've decided to plant, and most of my farmers tend to find themselves in this situation from time to time. They decide to plant because they just got this great idea from the neighbor to plant this great crop that generated a lot of money the previous season for the neighbor. And so it's important to ask yourself, once you've gone into something, whether or not it makes sense to harvest a crop. I've often run into farmers who harvest crops even when they're losing money. And so you have to ask yourself, does it make sense to harvest? Or should I just cut my losses? It's been surprising to me that oftentimes farmers do decide to harvest even when they know they're going to lose money, because they have such a hard time wrapping their minds around this idea of, I produced this crop and I can't just let it go to waste. And although I can appreciate that thought, I always encourage my farmers to think about their business and to think about their farm as a viable business. And so you have to make business decisions. Now, for evaluating your crop post-season, this is an opportunity to reflect on what you did and what you can do to better prepare for next season. And similar to the preseason concepts that can help you evaluate, it's the same idea for the post. It doesn't change. You're dealing with the same constraints and you're dealing with the same resources. Post scenario or the post situation, the difference there is that you have actual numbers. And so you can actually calculate the numbers to figure out whether or not you made profit. And then also to evaluate where you can adjust. to improve the next time you grow this crop. Another item here on this list that I want to highlight that is more on the business side and not so much on the production side is the revenue contribution. Growers tend to not look at the whole profitability of their farm, and they only look at the individual profitability of the crop. And so if that's what you do at the time, you also want to ask yourself, how does this crop contribute to the overall revenue? And does that fit and does that make sense to the overall business? These are questions that the farmer should often be asking themselves. We're going to dig a little bit deeper here and go into some enterprise profitability. We're going to be looking at profitability of a specific crop and its ability to make money for the business. I want to point out some areas that influence crop profitability and that help drive the profitability of any crop. Most of you are probably familiar with this. You look at your revenue, you look at your expenses, and you look at your profits, right, to determine. And it's really important to understand that it all starts with your top line to figure out profitability. And then it's also equally important to understand what your expenses are. Revenue is nothing more than a price-volume relationship. When you're looking at price, you want to ask yourself, is my price high enough? Am I getting in a high enough volume to help offset the lower price? So when you think about your revenue, you're thinking about your price-volume relationship. And so when your price is high, you can withstand and absorb a lower volume. It's also important to understand what your break-even price is when you're growing the crop. On the volume, because there's a relationship between these two variables, you always have to understand and ask yourself, is my price high enough to help offset any lower volumes? Given the business that farmers are in, you're always working with volatility, either in the market or on the production side. So it's super important to know and understand at what point is my volume helping me break even? So you're always having to ask yourself those questions. As for expenses, understanding what your biggest expenses are is going to help you assess profitability pretty quick, and they tend to be consistent across all the crops that I've worked with in this region. One of the questions I ask farmers when I meet with them is, do you know what your per unit or per box cost is? And most of the times farmers can't answer that question. Some of the expenses that are big drivers in determining your profitability are your sales commission, if you're selling through a wholesale channel, your plant cost, your packaging, your labor, your land, and your transportation costs. These are large expenses that are eating up most of your revenue. And so getting a handle on these expenses is going to help you as a farmer better manage your profitability. Figuring out crop profitability doesn't have to be complicated. You can do a back of the envelope profitability. Here you'll notice that the back of the envelope, I jotted down the profitability of organic romaine lettuce. So for example, on an acre of organic romaine lettuce, I can produce roughly about 800 boxes. Each box fits about 24 heads of lettuce. And the average price that I would be expecting to generate for organic romaine lettuce is roughly around $12. Now, The market can vary throughout the year. In this region, we can get about 3 different crops, three plantings of organic romaine lettuce, and you're averaging about $12. Your high can go as high as $20, $22, depending on the timing and depending on what Big Ag is doing in the region. But you can expect to get an average of about $12. And so at 800 boxes per acre, at $12 per box, I'm looking at generating about $9,600. And so when I look at the expenses and what it's going to cost me to grow that acre, I break it down into pre-harvest cost versus harvest cost. And so you'll notice there, and it's a little bit blurry there, but you'll notice that I have $2,500 for the pre-harvest costs. And it's everything from seed to packaging to fertilizer to weeding, land. And then for harvest cost, I've included packaging costs, which is $2,000, and harvest cost, $2,400. You'll see on the side of the envelope that I did a quick calculation on packaging. So at 800 boxes, I'm looking at paying $2.50 per box, and that equates to $2,000. I'm doing this math on the back of the envelope. And for harvest cost, my calculation here was 800 boxes. What boxes is what I expect to produce. And I'm calculating that it takes labor to harvest and pack 4 boxes of romaine lettuce per hour. And I'm expecting to pay $12 an hour. And so when I do the math there, I'm looking at a harvest cost of $2,400. So when I add up all the total expenses, I'm looking at $6,900. And so when I take the difference between the revenue of $9,600 and $6,900, I'm expecting to generate a profit of $2,700, which is a really healthy profit, because when you convert it into a percentage, you're looking at about 28% profit, which is a high profit from a percentage perspective. So yes, of course, price can change. Pest pressures, quality issues might decrease my production, and I can adjust these numbers just to look at the different scenarios to help me as a farmer make a decision. But this is a quick back of the envelope calculation where I'm not capturing all the individual expenses to figure out where this lettuce is going to cost me to produce. So I wanted to share that example in the hopes that as farmers, you don't get intimidated by this process, or you don't think I don't have time, or I don't feel comfortable using an Excel spreadsheet. You don't have to use an Excel spreadsheet to be able to figure out whether a crop will generate profit or not. Now, we're going to get maybe here a little bit geeky with numbers and start talking about just the specifics of what it takes to grow organic strawberries in a lot more detail. I do want to point out that these numbers I've drawn from cost studies that have been produced by University of California Cooperative Extension. And these are some of the cost studies that they put out for the industry. And so I'm drawing from that example because they have the data. And so it's easier to put out there and capture. What we're looking at here is the profitability of an acre of strawberries. And you'll notice that I've highlighted a few of the more expensive inputs. Packaging is one of those that I've highlighted. I've also highlighted sales, commission, and labor. You can see that these are the biggest expenses on this income and expense sheet that I put together. And I chose organic strawberries because strawberries in this region is a very, very popular crop to grow for the small farmer. It's a big moneymaker for the growers if they can produce the volume. The other reason I chose this crop is because farmers like to plant the strawberries in November prior to in November to produce the following year. And so it's a crop that goes into the ground and continues producing for a good 6, 7, 8 months, depending on how long it takes to get rain in this region. And so what you're seeing here is that if this farmer produces an acre of strawberries, you can see that they will generate about 4,200 boxes at an average price of $15. And this is a wholesale price that I'm using. And the expenses that they can't seem to get around or away from that are high are always your packaging and your labor. And so even with these big numbers, you can still notice that this grower, if they grow an acre of strawberries, will generate a healthy profit of $16,000. The other thing that I'll point out here, and I'll leave you with this, is that this is a very capital intensive crop to grow. And that's the other reason why I chose to use organic strawberries and highlight this crop in this webinar, because oftentimes our farmers focus on the profitability of a crop and don't think about or don't account or incorporate how much money will be needed to maintain this crop in production over a 6 to 8 month period. And so, although it's a profitable crop, we need to make sure we account for the cash needs to produce this crop. I also brought in a different crop, spinach, which takes a lot less time to produce. And you can get a number of plantings in a season. And again, I wanted to highlight this one and just point out that very similar to other crops, plant is a big expense in this case that I wanted to highlight. Labor to weed is a huge expense, and then your harvest cost. And so you'll notice that your revenue is much lower, right? 7,616. And your expenses are also much lower. And yet you're still profitable. You're still generating a healthy profit of 856 for this 1 acre of organic spinach. And so very profitable, 1 acre, 1 planting. Now, when you look at both of these crops and you compare them, you will notice that some of the expenses, big expenses, are the same for both crops. Labor and harvesting are the biggest expenses. And so if you account for those expenses when you're thinking about a crop and making sure you understand the expenses, the big expenses, your harvesting, your packaging, your planting, then you'll have a good idea and a good assessment or a better understanding of the profitability of the crop that you're thinking of. Just want to highlight that your top line is a very important line item that you want to be paying attention to, and that volume and price matter. And when one is lower than the other, you want to make sure that your other variable is helping out. So if volume is lower, you want to make sure that price is higher. If volume is higher, then you can afford to lower price to be able to move your volume. Now, I understand that a lot of the individuals in the audience today come market through farmers market, and so that's a little bit different. because as I understand farmers markets, there's not a lot of price volatility for the farmer at the farmers market. Price is something that farmers want to maintain consistent at a farmers market. And so when you have lots of volume, it becomes challenging to be able to move that volume through the farmers market. I have this one farmer that I'll quickly share that sells about 60% through wholesale and 40% through farmers markets. And so these two market outlets give this one farmer the opportunity to sell any excess product that she can't sell at farmers market through the wholesale channel. And so this farmer does a really nice job balancing out the volume volatility that she has on her farm. Just to highlight again, expenses, it's important to keep track of them. It's important to note them. It's always, I recommend that you write them down to keep track of them. A lot of the farmers that I work with have a hard time keeping track on paper, and not because they don't want to, but because of time. And so it's important to just be paying attention to your expenses as you're thinking about your farm and your business. And making sure that when you grow a product or a crop that you're looking at profitability. I mentioned that time is very important. And so when you're thinking about crop profitability and which crop to grow, you got to make sure that as a farmer, you account for the time you're investing, because time is that one resource that you don't have, that you don't have a lot of. And so when you're trying to manage your farm, you got to make sure you account for your time. It's super, super important. And ask yourself whether it's worth your time. I'm going to briefly talk about crop diversity versus specialization. And as we think about these two different production systems, I want you to think about them in terms of time, through the lens of time, because we all know that there are benefits to one production system versus the other. There are challenges and there are opportunities, just like anything else. With diversity, we all know that we can have a number of ecological and market benefits. With specialization, we know that we can lower our production costs and we can simplify our management on the farm. And it's a balance, right? I have a number of farmers that grow, most of the farmers that I work with grow minimum 3 to 4 different crops. But I also have farmers that are growing more than 35 crops. And for diversity purpose, it helps, but it also creates a challenge. And so you have to make sure you think about the time constraint when managing a number of different crops. On the specialization, what I want to say is think about it not so much from one crop versus many crops, but I encourage you to think about it from, okay, which crops do I feel strong and feel confident in producing? And so if you grow as a farmer, if you grow, let's say 5 to 10 different crops, choose 3 to 4 that you can specialize on. It helps to have your core crops that you specialize. And Javier, our guest, will be talking a little bit about that because he's one of the farmers that grows a number of farms, but he focuses on 10 core crops, which has really helped his farm thrive. When you're looking at crop diversity versus specialization, areas to consider under these two production systems are soil. And soil is really important to consider when you're growing the different crops, because there are certain soil types that don't help the farmers. I have a farmer, for example, that's currently struggling with verticillium. And so she has a diverse crop mix on her farm. She's growing about 7 different crops. And so this one plot on her 9-acre farm has been producing strawberries for the last couple of years with a lot of challenges. And this farmer just realized or just learned recently that she has a verticillium problem. And so her production numbers have drastically dropped. She was producing 3,800 boxes of strawberries on this one plot when she first started growing strawberries. Because of this soil problem, she's now only producing about 1,500 boxes throughout the whole season. So it's become a real problem for her. She's struggling to make money. When you're diversifying, marketing is one of the areas that you should also be considering. Oftentimes farmers want a diverse crop mix, but then when the product is ready to market, a lot of the farmers that I've been working with often struggle to market and sell the product. Capital needs, again, when considering crop diversity, you got to ask yourself, how capital intensive is this crop? Any building needs? Depending on the type of crop that you're growing, you have to ask yourself, what do I need to be able to get this crop to market? Examples of building needs for farmers that I work with is cooling space, washing lines, and oftentimes our farmers don't think about this when they get a piece of land and they want to grow a diverse set of crops. Farming equipment is a big one too when you're looking at diversity versus specialization. Pest management, labor. We can't say enough about labor. Labor in California has been tight. And when you're considering crop diversity, you have to ask yourself, how labor intensive is this crop? And do I have enough labor to manage this crop? Packaging, transportation, repairs, and maintenance are all inputs that a farmer should be considering when looking at these two different production systems. In summary, I want to highlight that farm viability is about the whole farm, and it starts with the crop plan. It's about thinking about access to markets, access to capital, and financial management or business management of the farm. Remember that profitability does not equal cash flow. Your crop can be profitable, and it might not give you the cash you need at the moment. And don't forget to keep in mind that there are certain areas that influence your profitability. And those are your plant costs, your packaging, your labor, your sales commission, and your transportation. And when you're thinking about diversity versus specialization, the biggest takeaway there is time. Think about time. I would encourage you as a farmer to think about your time and whether you have the time to focus on a diverse need of crops, or if you can focus on those crops that you feel more comfortable with. Here are some of the resources that I use in doing the work that I do to support farmers. We have UC Davis Cooperative Extension cost studies, lots of information there. I also use information from the Small Farmer Program, the University of California. USDA market news data provides you market information. I also like to use Michigan State Extension Farm Business Management Program. They have lots of information on different crops and costs for different crops. And I also like to draw from Oregon State University Extension Program as well. All really good resources. And there are other extension programs out there that provide really good production numbers. production costs for different crops that you might be interested in producing. And I encourage you to use that information as a reference point to figure out whether or not your crop is profitable, or to compare your costs against these other costs and ask yourself, am I producing the right number of units, or am I managing my costs? In a way that makes sense to produce this crop. And that's it for today's presentation. Thank you.
Thank you. That was a great overview of crop profitability and thinking a little bit about diversity and specialization, as well as the benefits of looking at a crop plan. So thank you very much for your presentation. And we did have a number of questions come in while you were talking. So first of all does profitability include return to capital?
The short answer is no. When you're looking at capital, well, it depends I should say it depends. When you're asking about capital, are you talking about the money you're investing in the actual cash that you're investing in the crop, or else are you also asking about capital in terms of equipment that you're using to produce that crop? You can look at it separately, or you can put them together. It just depends on how you want to evaluate that return.
Great, thank you. And then kind of continuing with the operating capital theme, can you touch on, I think it's investing on operating capital and how other operating expenses allocate on a per crop basis? Oh, no, sorry, it's interest on operating capital and how other operating expenses allocate on a per crop basis.
Yeah, I'm gonna try to. I think I understand what's being asked. So if I'm understanding the question right, the question is, if I borrow money to grow crops, and I'm paying interest on this money, this capital that I'm borrowing, how do I then allocate that expense of borrowing money to the crops that I'm growing? There are different allocation methods, but one way to do it, and one of the ways that I've done it, is by allocating based on revenue. So revenue contribution to your overall business revenue. So for example, if you have 4 different crops, and let's just say that 2 of them generate 25%, I'm sorry, let's just say that 2 of them generate 30%, and then the other 2 generate 20%. I would allocate the interest expense for that capital borrowed to grow those 4 crops based on that percentage revenue that each one of those 4 crops generate. So it would be 30-30 and 20-20, if that makes sense.
Great, thanks. Yeah, that makes sense. So how do you assess return on labor versus management?
Return on labor versus return on management. It's a good question. So when you're looking at expenses, you have what's called direct versus indirect expenses. And so within your people cost, you also have what's considered direct labor versus indirect labor, or direct people cost versus indirect people cost. And so you want to make sure that you separate those two if you want to look at that, and try to figure out how or what your return is on your direct versus your indirect. Your direct labor is any labor you use to produce and harvest a crop. Your indirect is basically any labor you have that either helps with the business at the production level. So for example, I'm thinking of people who transport the crop right from the field to the cooler and they don't harvest. That would be an indirect cost. Or people supervising a crew. That would be your indirect cost, right? And so you can separate those expenses and you can do a calculation on what the return is for that labor. But it would be separated between your direct, those who harvest, and your indirect, those who don't harvest. So meaning that the individuals who transport your crop to the cooler or to the market, and or those people who are supervising your crews, like your foreman or ranch manager. And then you look at, and so to calculate it, it's the sum of those expenses to figure out return. You would look at those expenses in relation to I wouldn't look at return on that. I wouldn't necessarily look at and evaluate the investment on that. I would look at it on as a percentage to your overall revenue generated for those crops. Your indirect people, if you have multiple crops, you got to make sure that you spread that cost across all these different crops to understand the relationship between that expense and the ability of that crop to cover that expense and still generate profit.
Great, thank you. So we're going to take one more question and then move on to the second half of our presentation. So someone was wondering, from your experience in your area, how many acres and how many crops are most likely to be profitable?
So yeah, that would be that's a really good question. And if we had like a formula for that, that would be a really good formula to have and to package and market. So I guess the way to answer that question for me would be the following way. So what I've learned over the last 4.5 years is I figured out some ranges. So the farmers, and this is regardless of acreage. Like I said, I've been working with farmers as small as 3 acres and as big as 110 acres. What I've done is figured out a calculation of gross revenue per acre. And so I've had on the high end farmers generate, excuse me, as much as $54,000 gross per acre. And on the low end, between $16,000 and $18,000 per acre. And so it spans the gamut in between, right? And so the average in that range has been between $25,000 to $30,000 of revenue, gross revenue per acre. And on the profit, I'm going to give you some percentages. On the profit, on the low end, the farmers who make money and are on the low end, they're generating about 10 to 12% profit percentage margin, which is basically, it's a formula of taking your profit divided by your revenue to figure out that percentage. So 10 to 12% on the low end. Middle range is between 16 to 18% of the farmers that I've been working with. And on the high end, we're looking at the low 20s, 20 to 23% has been those farmers who can generate consistently a profit margin of 20 to 23%, which is a really healthy profit per crop on a per acre basis. So I won't say that a specific number of acres or a specific number of crops is what's going to make you profitable. I would encourage you as a farmer to think about what it is you want to accomplish, what your goal is as a farmer, and for your farm business, and then try to manage time with that. I have farmers who are growing on 3 acres and have generated $500,000 in gross revenue and have netted $100,000, which is super, super amazing. And so if you ask me what's the formula there, well, I can tell you that their crops are very niche crops that very few people are growing. And so the market is big. And this person is only farming at this level because they've made a conscious choice that they want to stay at this level. But there's a lot of room for growth.
Great, thank you. So we're going to wrap up questions for now, but if you have more questions, feel free to send them in during our next speaker. And so I'd like to introduce Javier Zamora is the owner of JSM Organics and a graduate of the Agriculture and Land-Based Training Institute Farm Incubator Program in Salinas, California. JSM Organics is a CCOF certified organic farm located in the beautiful rolling hills of Monterey County, California. The JSM team is dedicated to producing the highest quality organic strawberries, raspberries, blackberries, vegetables, and cut flowers. The mentality of growing using natural means pervades the JSM culture and drives the methods by which their products are produced. So Javier, thank you so much for being with us here this afternoon. I know you have a lot going on, so thank you for taking some time to share your experience with us. And David, I think you have some questions for Javier.
Well,
yeah, Javier. Welcome, Javier. Yes, I do. Thank you for that, Megan. And the way I want to start with Javier is just asking him to give us a brief intro and share with us what he's currently growing, how long he's been farming as a certified organic farmer, what kind of markets, where you're located. Can we start off with that, Javier?
Well, thank you, David. Thank you, Megan. Thanks for having me here and share a little bit of my daily routine and my experience in this beautiful endeavor of being an organic grower. And it's a beautiful thing. I am in Royal Oaks, which is Aroma's Watsonville area in California, and we grow strawberries, raspberries, blackberries, a little bit of blueberries, quite a few of vegetables these days, and lots of organic flowers. My markets are driven by a family-owned, independently grocery stores, not the big chain markets, and some school districts and a little bit of farmers markets. I started JSM Organics in 2012, and we've been expanding every single year, and we are pretty happy to do so.
Javier, how many crops do you currently grow?
Well, during your presentation, you mentioned 10, but up to 30. I think probably about 35. However, 10 of them are in a larger quantity, and I can name them, like obviously strawberries, different varieties, blackberries, raspberries, blueberries, and then green beans, summer squash, and winter squash. And within those summer squashes could be between 5 to 9 different varieties. And lately, the last 3 years, we've gotten into the obviously Brussels sprouts. So those are mainly the big 10 that we grow. And then I grow, unique stuff. So I don't forget where I come from, like jicamas and a little bit of carnations and gladiolas. But I also grow some really unique stuff like proteas, or leucadendrons, or some foliage that it's really unique within the floral industry.
Javier, you have, it sounds like you have a very diverse farm, right, with up to 35 different crops. Can you share with the audience why you've chosen to specialize or focus on these 10 crops?
Absolutely. My main focus is to, I guess, take care of things. Not only my people, my customers, that obviously we all have different taste and different, uh, we come from different backgrounds. We like different crops. We like different vegetables. In obviously in Northern California, we're a very unique place where we have people from all sorts of life and different countries. We have our Latino audience that might like hot peppers and marigolds, jicamas. We might have, the millennials that like Brussels sprouts, but we also have people from India that love marigolds. And, so things like that. And people that eat heirloom tomatoes. So you have to kind of know, who your end consumers are. And then you have to understand that farming organically, you must take care of your environment. We must rotate. We must keep the land healthy so we don't face issues like the farmer that you were sharing that is having some issues with verticillium, and then you can't really grow the strawberry. So you have to be very aware of what you're planting, when you're planting it, and where you are planting it. And then, obviously, the people behind all this, which is the labor force. Without the labor force, there's no way you can have a sustainable farm. So therefore, you have to make sure they're happy. You have to make sure they work well, that they get treated properly, that they get paid really well, and also that you have a really good customer base that understands who you are, what you're doing, and what are your needs for you to stay in business and leave it for somebody else in the future.
I really appreciate you saying all that, Javier. Of all the crops that you currently grow, which one's the most profitable, and how did you figure that out?
So it depends. It depends where it's going to be, who's buying it, where it's going to be sold, when you're going to produce it, meaning what time of the season you're going to produce it, and how much of that are you going to be able to produce at that specific time. We know that in our area, we're really blessed because we can grow strawberries. If we really want to, we could probably grow them year round. You have to have, some hoop houses and probably a little bit of a greenhouse space, but it could be done. So strawberries is one because it produces for a long time. So you can first of all, you can grow them. Secondly, you have a long season that you can hit some really good markets. And if you have a really loyal customer base that understands, what your really, really bottom line is, and then they'll support you when the price is not so good, and they won't be pushing you to, for you to sell your strawberries at less than when you break even. So strawberries is one. The next one that is really good, and you touch a little bit on it, it's Brussels sprouts. Brussels sprouts these days, they have become the Dom Perignon of produce because lots of millennials and lots of people are really getting into it. Organically, the price usually, it can range depending on who you sell it to, but wholesale anywhere from $2.25 per pound to almost $4. And if you sell them directly to a restaurant, you might be able to sell them for $5.50 a pound. Or if you have farmers market, you probably sell it for $5-6 a pound. However, not everybody can grow Brussels sprouts organically because it's just like strawberries. You have to know the varieties because some are good for winter time, some are good for fall, some are good for the summertime, but they all have a lot of aphids problems. So you have to be aware of that. They grow a lot of weeds. They require some really heavy soils because if you have a sandy soil, guess what? You're going to have to trellises them, otherwise they're going to fall because the soil will not be able to retain them. So all those kind of things. So you have to really, really understand who you're going to sell it to, when can you grow it, can you grow it yourself, and what are the challenges. I'll give you a good example. For me to really grow something in a little larger scale, I normally play with something or do some testing, minimum 2 years before I can actually introduce it to the market, because that way you can figure out, oh, this is very difficult, I'm not going to be able to grow it, or I'll try it again, or this is really good and everybody loves it, but I don't have enough, right? So you have to know.
Yeah, no, I really appreciate you giving that example of Brussels sprouts, Javier, and the challenges that comes with producing that crop, because, yeah, I mean, when you have challenges, your volumes are going to suffer. And so just drawing on that concept of volume, and then you also brought up price for the different channels. You named independent grocery stores, you named restaurants, you named farmers markets, and they all had different prices that you shared with us. So when you think of price and volume, I mean, as a farmer who grows more than 30 different crops, how do you manage that price volume relationship for any one of your crops, for any given crop? Or how do you think about it?
Well, you have to know how much. Well, let's say I'll give you an example. Strawberries. You know, this time of the year, I'm making a decision whether I'm going to be planting 16 acres of strawberries or 30 acres of strawberries for next year. So my customers could probably very well, and I'm talking direct customers, can take, you know, easily 15 acres. But if I go to 20, that means I'm going to have to get into a relationship with a broker or a distributor, or perhaps hire more people to hire somebody else that can sell them in different other channels, like maybe start shipping them to people in New York City or Wisconsin or whatever it is. So you have to look at the numbers, and you have to know what's your comfort zone and what are you trying to achieve. If I go 25, that means I'm going to have to hire more people that are really good experience picking the berries. And I also have to think that I'm not going to be getting my $24 a case all the time. There might be times that I'll be getting $14, maybe $12 a case. Now, does it really make sense for me? And if you do all those calculations like you mentioned, and if you want to jump in the water, it's entirely up to you. But so you have to know what it really takes, what the fixed cost is, and what, you know, how much is it going to vary during the season. So what's the good, what's the bad, and what's the ugly. So you have to really, really sit down. And this we're talking about after you already have experiences with, first of all, you have the experience of how to grow something, and you have the customer base, and when you're jumping into or expanding, so it's a give and take. You could hit it, you could probably lose it. How much risk can you take? So you have to look at a bunch of things. I hope I answered the question.
Oh, you did. Thank you, Javier. So we've been talking about price, we've been talking about volume. What about cost? What are your top 2 to 3 expenses for any given crop that you grow?
So everything has a cost, and you know, some are big, some are little, some are very minute, some you don't even pay attention to. The biggest one is obviously how much it's going to cost to put plant an acre of romaine lettuce. The plants, preparing the land, you know, land prep, pest management, harvesting, and boxes. The things that you touched on, the bigger ones, obviously, it's obviously labor, materials, and and maintenance. Or what is it going to cost? Some of the big things like pest management, and then the logistics for you to once you have the labor to and the packaging to harvest that. Are you going to bring that to a cooler? Are you going to bring this to a farmer's market? Are you going to bring this to a distributor to the city or drive 5 hours to a grocery store or something? So all those things are important.
I really appreciate you sharing those and highlighting those, Javier. I'm curious, how has your approach to crop profitability evolved over the years that you've been a farmer?
Well, it's something that you really have to pay attention to because every year is different, and every year there's a risk, and every year there's a beautiful personal satisfaction and a bigger check at some time during the season. When you have loyal customer base, you kind of know how much you need to supply their needs, and you can take some risk, but also you have to keep in mind that in the water there might be another fish, there might be somebody else, or even one of my someone that I'm mentoring to do the same thing that I do. One of my students might be getting out there and doing some of the things that I do better and getting to some of my markets, which is really good because I share all my marketing tools. I tell people what I grow. So it could actually bite into my profits or the size or the whatever I'm growing. So every year, if I'm gonna grow, I normally grow like 7 to 12 acres of green beans for this time of the year. Every year I switch things a little bit. Sometimes I grow 3 acres at the beginning of the season. Sometimes I grow an acre during July and August when everybody can grow green beans. But maybe in October and November, I have 8 acres. There's a big risk that I take, but the returns could be really big. Now, I normally have a budget of summer squash, let's say 10 acres, but I plant them at different times. So every year, I switch things a little bit just to make sure that I can hit at least a really good market. And a really bad market, you will always hit. So I hope I'm answering the question. So that's how I play with things a little bit, the risk that I take. And it's paying off.
Yeah, no, it makes a lot of sense, Javier, that you've been adjusting over the years based on your learnings, right? Not only from a production perspective, but also from a market perspective. So you're paying close attention to the market. And the market has helped guide you at the farm as well. And so you've made adjustments to make sure that your farm is prepared for the market.
David,
and that really resonates.
David, if I may, you must stay engaged. You must continue educating yourself. You must know what's going around. You have to investigate and hear other people and see what the markets are doing. I know it's hard and we can't do it all, but those are indicators that will help you succeed if you pay attention to them. So staying engaged will help you. It might not be the solution to everything, but it will definitely help you. Understanding the markets, understanding what's trendy. I don't have a lot of time to watch TV, but I glance at an article, I open up the magazines, I open up some emails, even if it's, a minute or two. If there's something that I learned about Brussels sprouts 3 years ago. So this is nothing new. I'm not creating an animal that I said, oh yeah, it's mine. No. So it's educating yourself.
Oh, thank you. Thank you for that, Javier. So how can you, so with what you've just shared, how can you please share with us, how can you get support to start thinking about crop profitability?
How can I get support?
Yes, how would you go about getting support?
Oh,
And what are some of the resources that you know of that can help small farmers?
there are a lot of resources out there. I mean, you share some of them. The university extensions, nonprofits. I'm talking about, your organization, Kitchen Table Advisors, FarmLink, CCOF. Read that email that you get, that every, once a week you'll get something. Go through it. There's always something interesting. There's always a workshop. There are a lot of people out there that will share their knowledge, some farmers. Look at the markets, look at the USDA websites, look at the, markets like the wholesale market, whether you're in LA, San Francisco, Michigan, or, there's always pricing. And also get familiar with some chefs and see what he's paying, she's paying, or a retail store. The produce manager will probably share some of the price list that they get every single day at 2 in the morning. How about that?
Yeah, no, that's great, Javier. That's really, really good. And on that last note about asking for prices, I'll just go ahead and share just from my experience that grocery stores and these larger grocery stores throughout the country, rule of thumb is they're adding at least 30 to 50% on top of the price they get for any crop. So if you can get your price per pound for any crop at the grocery store, you can figure that they've added about 30 to 50% margin to that crop, and you can back into the price that they're paying for future reference. But that's all the questions that I have for you, Javier. I really appreciate you taking the time to be with us this afternoon and sharing your farm and your experience.
Well, thank you, David. That was easy. If anybody needs to contact me, and my info is probably somewhere there, I will probably be answering around 1 a.m. in the morning, but you'll understand.
Yes, thank you very much. And we had a couple of questions come in during your talk. So, and actually, let's see, so there's a couple of questions, Javier, about sort of your experience being organic, and someone was wondering how important is being organic to your profitability, and then sort of related to that, they're wondering if your sole income is from your farm, and if other organic farmers are making a living here in California.
Well, I'll go with the number one, the last one. Are organic farmers making a living in California? Absolutely. Yes, but you have to do a lot of the things we talk about. Diversification, not only in what you grow, but also a customer base. Is this the only income I have? That's all I do. I don't do anything else. My income might not be a lot, but I am still in business and I'm doing, I'm paying the bills for the most part. What was the other part? The
beginning was how important is being organic to the profitability of your farm?
There's absolutely no way I wouldn't do anything else. To me, organic is the answer to being sustainable, meaning because you're able to get a little more money, because you're able to do things that if you are in a conventional setting, you might not be able to do, meaning like in a conventional field, you might not be able to bring a college group or, high schoolers or second grade, third graders. to your farm and try some strawberries off the plant. You might not be able to come back home and hug your wife, your kids, or pet the doggy because you have some pesticide residues on you, and it's just that's how I was brought up with my parents being farmers. They weren't organic, but organic didn't exist 45 years ago. But I was really blessed that I came to an area here in beautiful Santa Cruz that that's the mecca of organic food. So naturally for me, that's the way to do it. And this has a lot of potential and it can change many people's lives in this community.
Great, thank you. So now we're going to open it up to questions for both David and Javier. So if you have any other questions you want to send in, please go ahead and do that. And David, there was just one quick clarifying question about your romaine lettuce example. Was it multiple rotations or was it 1 acre for one season?
That was 1 acre, one planting.
Okay, 1 acre, one planting, great. And then we also had a couple of questions come in about crop insurance. Someone wondering if crop insurance is a good investment, and Javier, whether you have considered crop insurance.
My God. It's a great investment if you can get it. We can have an entire webinar or workshop about crop insurance. There are quite a few insurance out there. The ones that we know, obviously, are NAP insurance that are available through the USDA, but there's also some other insurance that you can purchase. So the NAP insurance would be your liability insurance. You can buy, these days, MPCI, which would be a little higher up policy of strawberries, zucchini, or Brussels sprouts, whatever it is. And there is something new that's been around for maybe 4 or 5 years now through the USDA, a pilot program, which is whole revenue insurance, which to this day, I'm still struggling on how to really get that kind of insurance on a smooth yearly basis. One of the biggest issues is that a small diversified farmer conflicts with the norm of a big farmer for whole revenue insurance. So they don't understand it well. So there's a lot of work that needs to be done from the USDA pilot program to what companies they're hiring to serve communities where there's a lot of beginning farmers. So there are big challenges, but insurance is something that we should all have. You must have all types of insurance when you have a business. In a farming setting, besides your liability insurance, your workers' compensation insurance, you must also have crop insurance. Muy importante. You must have it.
Why not? Thank you. So I think we're going to wrap things up. So thank you to everyone for taking some time this afternoon out of your busy schedules to be here and giving us a little insight onto crop profitability and how that works on the farm. We appreciate both David and Javier for having you here. So thank you.
Thank you.
Thank you, Megan.
And we're going to do a quick wrap up. Just a couple additional resources. I often get questions about where you can find organic prices. So one place, the USDA does publish organic prices, and there's a link to that there. And then I always like to highlight NCAT ATRA because they have a 1-800 number, and if you have a question, like if you're looking for enterprise budgets and wanting to know if there's strawberry budgets for your area or whatever, they will do some research for you. So that's always a good resource. And a while back, they did have a publication on enterprise budgets for organic growers. So just some upcoming events. We have some webinars this winter. We'll have a small farm food safety questions demystified webinar in November, and that's geared towards sort of demystifying some misconceptions or and common questions around food safety. Then in December, there's the Organic Grower Summit that's co-hosted by CCOF and the Organic Produce Network, and that'll be in Monterey, California. And then in December, we will be doing a webinar on crop insurance and kind of a practical guide to help you find crop insurance agents, and also think about if these products are right for your farm given the types of crops you grow. And for if you have any high school students in your life, the Future Organic Farmer Grant Fund is accepting grant applications for organic focused FFA supervised agricultural experience projects, and that's open until November 15th. And it's always great to see all of the what the kids grow in. And I should note that the date is on there wrong. It's open until November 15th, 2019. So, and also, I know there's a lot of wildfires going on in California. So if you or someone you know has experienced a hardship and you're an organic producer, the CCOF Foundation Rickmont Hardship Assistance Fund accepts applications through November 25th, and that it's to cover your organic certification fees or towards that. So please send people that you know that have experienced a hardship your way. So thank you very much. Please fill out the evaluation form when it pops up in your screen, and it was a pleasure spending the afternoon with you all. Have a good day.